right, everybody, give me one moment. All right, we should have the audio working. I finally have the microphone after like 3 weeks or even a month of not having it. So give me one moment. Okay, welcome everybody. Thank you for joining and welcome back to Walks and Wall Street. Today is Tuesday. It is July 25th, 2023. It's about 8:58 p.m. and we're reporting live from the one and only Hudson Yards. Now, I love coming over here. Hudson Yards is fantastic. I think they did a really great job with the development. Super clean, by the way. Now, you can't see. You're going to be able to see in a moment here. But if you look dead ahead, you can sort of see the silhouette of the Empire State Building. One of the main reasons why you can't see it is because it's covered by a tree right now. So we'll dive right into it. It's started off to be a very busy week, with tomorrow in particular being the day of all days on Wall Street. Now, for those of you who don't know, tomorrow is July 26th. It is a Wednesday, and it just so happens to be the conclusion of the FOMC meeting. Now, for those of you who do not know, the acronym FOMC stands for Federal Open Market Committee Meeting. And this is when we are going to hear from Federal Reserve Chairman Jerome Powell as he makes the announcement and sets the precedent for monetary policy. Now, if we do a quick review, which I think is important because tomorrow is Fed Day, I think it's important to understand where we've come from, sort of how we started to where we are today. So assuming tomorrow Fed Chair Jerome Powell comes on the news at his speech and raises interest rates, this would be the 11th interest rate hike since March of 2022. Now remember, March of 2022 is when we started this quantitative tightening cycle, so QT. If you sort of follow the timeline here, and I think this would be good, I actually want to give you guys a resource. So let me go ahead and put this in the chat, but actually better yet, I've made it a Nightbot command. So if you type !CPI in the chat, it's going to drop a link to the Bureau of Labor Statistics website. But this is a really, really good infographic here. It's the 12-month percentage change for the Consumer Price Index that is broken down by individualized categories. So click the link. It's going to take you to the Bureau of Labor Statistics website and check it out. Play around with it because it's going to give you a visual on inflation. And you could sort of track monetary policy changes as it relates to interest rate hikes, as it relates to the expansion of the balance sheet, and inflation. So if you want to go ahead and click that link so we all follow along here together, inflation in the United States, and this is the headline number, by the way, so headline inflation for CPI peaked in June of 2022. The reading came in at about 9.1%. Now, fast forward a year, in June of 2023, the headline CPI number came in at 3%. Now, if you remember correctly, the main Fed target is to bring inflation back down to its 2% range. So the long-term trajectory where the Federal Reserve and Fed Chair Jerome Powell want inflation to be is right around 2%. So it seems as if this very aggressive quantitative tightening cycle is actually working to help bring down inflation. But that's not the only piece to the puzzle here, because again, if you refer to this chart, I want you to go ahead and click food at home. I want you to go ahead and click energy, electricity, apparel, food, gas, food away from home, commodities, new vehicles, used vehicles, and shelter. And one of the things you'll notice is that some categories are showing much better improvement than others. There's two in particular that are standing out like a sore thumb that we haven't seen too much improvement in, and I'd like to review that with you all now. Go ahead and scroll down to shelter. Okay, if we do this line item by line item, shelter actually topped out here in the United States in March of 2023 with a reading of 8.2%. If you fast forward the last couple months, the most recent shelter reading that we've gotten in the United States, according to the Bureau of Labor Statistics, is 7.8%. Now, you're probably thinking, well, that sounds really horrible. And you'd be correct, right? So we've seen almost every other category, specifically when it comes to energy, absolutely crater, fall off a cliff. Commodities prices are in free fall. But the only category that is still giving us trouble is shelter costs. Now, we'll talk about some potential catalysts that could potentially bring this down, but if you think about the weighting of the CPI, right, if you think about core CPI, and if you think about the headline number, there's about a 33, maybe a little bit more now, weighting towards shelter costs. So with shelter still being elevated, and with CPI coming all the way down from a high in June of 2022 at 9.1% all the way down to June 2023 at 3%, if shelter really starts to unwind here and property values start to go down, rental prices start to go down, it is very possible you could be dealing with a deflationary problem in the United States as opposed to an inflationary one, which is crazy to talk about, but it's true. So I just wanted to keep that in mind. So tomorrow's the big day, FOMC meeting. If we take a look at the futures market, okay, there's about a near 100% likelihood that the Federal Reserve is going to raise by 25 basis points tomorrow. Now, if that's the case, that's going to bring the Fed funds rate to a target range of 5.25% to 5.5%. And that would be the highest interest rate in terms of the Fed funds rate since January of 2001. So on a historical basis, since the turn of the millennia, interest rates haven't been this high. So I think that's important to note. Additionally, what's important to note is that it is consensus on Wall Street that this is going to be it. If you look at reporting from economists at Goldman Sachs, economists at JP Morgan Chase, BNP Paribas, all of the major investment banks, there's a pretty hard consensus here on Wall Street that this is going to be it, at least for now. This is the top of the Fed hiking cycle. They're going to bring the Fed funds rate to 5.5, and then they're going to call it a day. We'll see. There's obviously going to be a lot more inflationary readings rolling through. The one I think is most important to look at is obviously core CPI, but also PPI and wage inflation. If you remember our conversation from about 2 or 3 months ago, Fed President John Williams, which just so happens to be the New York Fed president, he said, look, wage inflation is the main factor that's going to continue to push inflation higher in the United States. If people continue to make more money, if people are gainfully employed, which they are in the United States, we have some of the lowest unemployment in history of this country. So more people are working than ever before. Unemployment is at its lowest rate that it's almost ever been in the United States since the 70s. And in addition to that, what's super critical here, guys, is that consumer spending remains elevated, which sort of makes sense. We talked about wage inflation. If people are employed and they're making more money, well, Harvard Business School actually did a study about lifestyle creep and lifestyle inflation. If you're making $100,000 a year this year, but your boss gives you a $20,000 raise and now you're making $120,000 a year, the majority of people will spend all the way up to the threshold of $120,000. Very, very seldom do they continue to keep their costs fixed And I think that's one of the things that's been driving this economy. So we'll talk about that tonight. Last thing I want to mention for this week is earnings. Okay, earnings. I'm seeing some of the chats roll by. We are in the thick of earnings season. Okay, today was a big day after the bell. You have Alphabet ringing the register at the highs, up 5% after a phenomenal quarter, beat both on the top and the bottom line. If you take a look at EPS estimates for Alphabet, parent company of Google, many Wall Street analysts were expecting $1.34 worth of EPS. We came in at $1.44. Okay, if you want to look at the top line, many analysts on Wall Street were expecting $72.82 billion. We blew past that number, came in at $74.6 billion, and the most important category, in my view, when you're talking about Alphabet's earnings is the Google Cloud unit. Now, I don't even have to say this. I think you guys already know. And then I'm going to sort of close my computer and then we'll start to do the live stream. But one of the biggest criticisms of Alphabet over the last couple of years is that the cloud computing unit isn't profitable. It's burning cash. They're just trying to acquire customers at all costs. It's not making any money, yada, yada, yada. However, last quarter, I believe, or maybe 2 quarters ago, was the first quarter that Google's cloud unit was profitable. So if you look at it, I'm going to see if I could put the earnings report in the chat here, but if not, if I don't have time, you guys can just look it up yourself. If you go to Alphabet's investor relations page, scroll down to operating income for their cloud computing unit, came in at $395 million. Okay, so operating income is positive. They made about $395 million on their cloud computing unit this quarter alone. That compares to a loss of about $590 million last year. Okay, so this is good news for Alphabet. Their cloud computing unit continues to gain market share against Amazon AWS and Microsoft Azure, and now they are profitable. So this is good. Now, Microsoft was also up on the chopping block today. Meta is tomorrow, I think, or maybe Meta is Thursday. I'm not sure. You guys can look that up. Maybe Sparks Carnival is in the chat. I'm sure he knows about that. But anyway, Meta, I think, is tomorrow. If not, it's Thursday. And then next week we have Amazon as well as Apple. Let me go ahead and put my laptop away. I'm going to say hello to everybody in the chat, and we will get started. It's actually a really nice day. Very low humidity. We just had a little bit of a rainstorm push through. And I'm optimistic. Nice weather. Very cool out. However, I am a little bit disappointed I didn't get to spend too much time in Miami. But anyway, that's a story for another night. And then tonight we got to talk about home builders. I know I just threw a lot at you guys, but we haven't been streaming for the past 2 days. And tomorrow's a big day with the Federal Reserve, so I just wanted to give a quick recap. In front of us, we have the beautiful Empire State Building, my favorite building in the entire world, and it is looking fantastic tonight. Hey, I see Sunshine After Rain is here. Dutchman, good to see you. Cindy Foley, Prodman. Melee is here. Ali Star. Hey, Sparks Carnival is here. I knew you'd be here. I'm interested in your thoughts on all these earnings. We'll talk about it tonight. Sally's here. Billy Johnson, Austin City Limits. Vincent NYC says, Tom, where are you sitting? That's a good question. So Vincent, this is Hudson Yards. This is one of my favorite locations in the entire city. I think they did a really good job with it. Very impressed. There's outdoor dining from the restaurants here. Everything is brand new. Really gorgeous. I see Steph UH is here. Good to see you, Steph. But yeah, I love Hudson Yards. It's fantastic. We're actually going to pass by the Whole Foods tonight. We're going to make a left, and if we have time, we might as well take a walk on the Moynihan Highline extension, because I kind of have to stay local tonight because I have an early start. I actually have to go to Red Hook, Brooklyn tomorrow. Anybody ever lived in Red Hook, Brooklyn? Any thoughts on it? Maybe you visited before. Now, I would say I'm not going to use the term excluded, but I guess I will because I can't think of any other terminology to describe it. You know, Red Hook, you kind of need a car to live there, but the views of Manhattan are really unmatched. It's a very tight-knit community there, very charming, very quaint, very, very nice. But there is a little bit of a lack of public transportation. I think that would be my only qualm about it. Hey, Jeff is here, says, I agree, Hudson Yards looks awesome. They did a great job. You have stunning views of the Empire State Building, stunning views of the brand new Moynihan Train Hall, which is directly in front of us. But check out all of this commercial space, as well as a lot of these luxury and ultra luxury apartment complexes, condominiums, lots of outdoor dining space as well. Hey, George Hernandez says, hey Tom, there's a 104-story building being developed in downtown Miami right next to the Waldorf Astoria super tall building. No way, it's being developed by the owners of the Chrysler building. Well, when we're back in Miami, which, God willing, hopefully will be maybe in 2 weeks, maybe 3 weeks, we'll have to check that site out. Hey, I see Clarence Jackson. Says the Yankees and Mets are playing tonight. That's why the Empire's lit up in those colors. I didn't know that. Now, what is that called? The Subway Series, right? When the Yankees play the Mets and vice versa, I think it's called the Subway Series. But man, that is an iconic view. Super picturesque of the Empire State Building. Hey, Jimmy Hook says, evening all. Hope everybody is having a profitable week. Yeah, I mean, look, anybody who's been long this market, right? And I think one of the reasons why the market has been acting very favorably is because it's almost been a contrarian trade. I mean, has it not? I mean, would you guys say that? Now, when you talk to friends, when you talk to coworkers, you know, maybe you're having conversations with your spouse and your financial advisor, I think over the last 3-4 months, people have still been really negative. At least the people who I talk to, right? And I think it's important to understand and note, this is the brand new Highline entrance, by the way. Fantastic job. Markets are forward looking by about 6 months. Markets look out into the future. And all of the true market leaders are pretty much up and out, right? You think about your Palo Altos, you know, we talked about at the very beginning of the stream, Alphabet reported a great quarter, beating on both the top and the bottom line. Their Google Cloud unit is now profitable, pretty solid operating income from that particular unit. I think that's is up about 5% after hours. I think the stock year to date is up now about 50%. So you're starting to see a lot of broadening out in the market and more participation from multiple sectors, not just big mega cap tech. So yeah, I don't know. I'm going to scroll through some of the comments here, but would you say that the consensus from your friends, colleagues has still been pretty negative outlook on the market? At least the people that I hang around with, I've been the contrarian, I would say. Hey, Justin S. This is the Hudson Yards open 24/7, or do they close? I think a lot of the common space is open 24/7. This is that new game that everybody's raving about, paddle. Anybody a big fan of this? First it was pickleball, and now it's paddle. This is huge in Miami. There was paddle courts all over, right near Biscayne Bay, tons of it. Wow, Cindy Foley says gas prices have spiked in the Dallas-Fort Worth area. Sparks Carnival says Russell 2000 seems to be bottoming out relative to the S&P. I think it's ready to bounce. Yeah, I mean, that would be ideal, right, to start to see that sector rotation out of the big caps into the small caps for, you know, increased breadth, if you will. And historically, that's what you usually see at the beginning of bull markets. Love this tree in the background. Oh, SGRA says, Tom, I used to hang out in Red Hook back in the 80s, worked at the shipyards and lived on Myrtle Avenue. Whoa, very cool. Yeah, you know, I noticed it's sort of like very hip. It's sort of like the hidden gem of Brooklyn, like it's Brooklyn's best kept secret, if you will, Red Hook. Very desirable, sought after neighborhood. Now again, kind of far away from transportation. I guess you can take the subway there, but you're gonna need to walk a little bit of a ways. But it's nice. They have all of those old train cars, I've noticed, on the water, great views of the city. There's some new developments going up there, which I will be checking out tomorrow. So I'm really, really excited about that. There's an amazing new project that's going up in Red Hook, and I'm going to get the privilege, I'm super, super thankful that I'm going to be able to get to tour this amazing development. So I'm going to give you guys my honest review like I do on every development that I tour. First we toured 130 William, then we toured Olympia Dumbo, and now tomorrow I'm going to be touring a property in Red Hook, which I'm really excited about. So, hey, Kirby's here. What's up? Says, Tom, what are your thoughts on Florida property insurance companies leaving the market? Should taxes be used to aid the coverage? Will banks continue to give loans without property insurance coverage? Kirby, it's a fantastic question. That's the $1 million question. And it is very concerning, in my view. In my view, it is very concerning for obvious reasons. Now, I'm a property owner in Florida, particularly South Florida. This is the Edge building here. But look, I think this is going to be an increasing, growing trend, if you will, in specific states. Number one being Florida, number two, California, and even parts of New York. Obviously due to natural disasters such as hurricanes, tornadoes, wildfires, you name it. I think Allstate has stopped writing new homeowners insurance policies in the state of California. Now, existing policies will still be serviced and will still remain intact, but there will be no new policies written from Allstate in the state of California. Same thing is happening in South Florida, so that's why I sort of offer this piece of advice. If you're looking at buying, right, or even renting, if you're looking at buying or renting in the state of Florida, particularly in South Florida, you have got to study the FEMA flood maps. One of the ways you do this, right, let's say if you're going to move to a small town inside of Miami, right, either North Miami Beach, Sunny Isles Beach, you name it. One of the things you could do, and we're actually going to loop it around here, so we're going to head back this way and loop it around. But one of the things you should do, especially if you're looking at buying single family homes, duplex, triplex, anything you own, right, that you're not living 100 stories in the sky, you've got to look at the flood maps and study them. So if you go to your local municipality, if you go to their website, they actually have to post all of those flood maps for free online. Now, very seldom do people actually look at these things, but the 1% who do could find really, really good deals. So what you want to look for is flood zone X. Okay, flood zone X. Because what I'm betting on, right, and sort of I've put my money where my mouth is here, what I'm betting on is over the next 10 years, this problem is actually going to get worse. It's not going to get better. In states like Florida, in states like California, and even parts of New York, particularly South Shore, Long Island, parts of Queens, and Staten Island. The neighborhoods that don't flood are going to become increasingly more desirable. So those of us that can accumulate, they just closed it. That's a bummer. We'll go around the other way, no worries. Anyway, but those of us who could accumulate properties in those key non-flood zones, particularly flood zone X, I think your land values are gonna go on a tear. In my opinion, right? This is all opinionated stuff. It doesn't mean I'm right. So again, even if you're gonna buy on Long Island, specifically Nassau, Suffolk County, near a lot of the canals, near a lot of the waterways, you've got to pay attention to that stuff because it does matter, right? Talk to the locals, door knock the neighborhood, right? I would go house to house to house, knock on everybody's door and get the inside scoop. Introduce yourself, say, hey, my name's Tom, I'm looking at moving into the neighborhood. I just wanted to introduce myself and ask you, how long have you been here, right? I did that in my neighborhood in Miami, and some people have been there for 80 years, and they said, yep, it never floods. We're the driest block in the neighborhood, and you'll learn a lot about it. So in Florida specifically, to sort of answer your question without going on a big tangent, there's literally one main insurance company, and it is called Citizens. That's actually who writes my policy. And it's essentially like a government subsidized insurance company. So I think it's going to be a big issue, particularly for commercial, big multifamily deals. To your point, is it going to come a time where banks are just not going to underwrite these deals? I don't know. It's possible. It's definitely possible. I don't know. What are your thoughts? I'm more interested in what you guys think. A lot of times we actually have insurance agents who tune into Walks on Wall Street, and you guys probably have a better inside scoop than me. Yeah, Cindy Foley says also get a police report on the crime in the neighborhood. That's a really good move too, very smart. You should know who your local mayor is, who the police chief is, 100%. I see RJ is here from Colorado. What's up? Good to see you. Jeff W277 says, Tom, I pay a total of $30 a month to insure my place. Holy crap. Well, my homeowner's insurance is about, it's almost embarrassing to say it, it's about $4,500 a year. So there you have that. Quinn, let me get to your comment. Hey, Colton is here. What's up? Hey, Mark says, I keep reading Tampa is the big growing city there in Florida. You know what so Mark, well actually, hold on, let me think about this. Yeah, I guess I could say it. So I may be assigned to an interesting project in Sarasota, Florida. Is anybody here familiar with the town of Sarasota, city of Sarasota? I'm not a big West Coast Florida guy. I'm more of an East Coast. But I think the biggest city near Sarasota is Tampa, I think. And supposedly a lot of New Yorkers and a lot of people from New Jersey, right, that tend to be, high net worth, ultra high net worth, they send their kids to school in Sarasota, Florida at these very elite sports schools. I think one of them is called IMG Academy. Is anybody familiar with that? IMG Academy? Anyway, I can't say too much right now, but I may be put on a big assignment there. And it seems like a lot of people in the chat are familiar with Sarasota and Tampa, so I may have to connect with you guys on that. Sierra says, Tom, I've lived in Sarasota for a short time. Steph UH says, my dad grew up there. I loved it. Very cool. Tim, what's up? Oh, George Hernandez says, I'm going to love it. I know, brick stone wall, isn't that expensive? Look, there's trade-offs in everything. The way I think about it, or the way I cope with myself, which is probably a more realistic term, if I'm just being honest, it's the price of living in paradise, right? It's just the cost of living in paradise. If you live in South Florida, we get hurricanes. That's a reality, and that's a big risk. But I try not to worry about the 10%. I try to focus on the 90% where it's really nice. And 10% of the time we have crazy hurricanes and things like that. So who knows? Okay, we are now on the corner of West 33rd Street and 9th Avenue. You can see the brand new Moynihan Train Hall here, as well as the Empire State Building. Matthew M says, Tom, my grandparents had a house in Sarasota. It is very nice. Longboat Key. Oh, and Anna Maria are top notch. Let me take a screenshot of that. Yeah, I'll keep you guys updated on that. Oh, Sierra says there's a particularly a tennis academy there. Peyton says IMG is one of the best sports schools in the nation. Yeah, and I guess it's in Sarasota, Florida. So essentially I was in a meeting and the debrief I've had is that, hold on, let me just get across the street here. Okay, so here's the debrief and then we'll sort of move on to another topic. And I actually kind of agree with this. So here it is, I'll give you the spiel. Places like Miami, Fort Lauderdale in particular, Palm Beach, right? You think about the trifecta, Miami, Fort Lauderdale, Palm Beach. They've gotten so ridiculously expensive, especially since the Big C, right? Since the Big C, for obvious reasons. And it's also become very crowded. Has anybody noticed that? Has anybody's been to Miami recently? It's very crowded. And it's gotten very expensive. So it's sort of lost its luster, if you will, in terms of the attractiveness to move there. Now, I think it's still a great place. I love Miami. I own property there. I'm not trying to be negative on it. The point I'm trying to make is that, from what I'm hearing, is that people are looking for sub-markets that have very similar climates, lower costs, and less people. And from my meeting, that I was meeting with some developers, people are looking at Sarasota for that reason specifically. Great schools, great sports academies, like very elite sports academies that are very expensive. And these tend to be feeder schools into, Division I universities. Right? If your kid wants to play sports, maybe they want to play soccer or tennis or whatever, baseball, I don't know. These particular schools or academies tend to be feeders into those schools. So they'll charter the kids back and forth between between New York, New Jersey, Connecticut, New Hampshire, upstate New York, places like Syracuse. They'll send their kids there. So I don't know. I don't really know too much about it, but if I'm put on assignment there, I guess I'll know a little bit more about it. Hey, Troy Atman says, Tom, check out St. Petersburg, Florida. Kathy Wood moved there, and it is on the water. I did hear about that too. Kathy Wood did move her ARC ETF company there, her investment business. You're 100% right. George Hernandez says, Tampa and Sarasota are very nice places, in my opinion. I haven't been to Tampa in some time. I mainly stay in Miami and travel between Miami and Orlando. But Tampa, from what I remember, is a great place. Yeah, the only thing that I'm a little bit concerned about, guys, now this last hurricane season that we had, it was specifically, wreaked havoc on Fort Myers, which I think is sort of in that vicinity. It completely destroyed the place, which was heartbreaking. I saw some of the footage on it. But, hopefully they'll build back, and I think they are in the process of building back. But that's a risk, right? That's a risk. One of these big storms could come and wipe the whole place out, and that is one of my biggest concerns. Jeff W277 says, is Florida a big soccer state? I think the biggest soccer state in the United States is actually Tennessee. Believe it or not. I think Texas and Tennessee are the two biggest soccer states. New Jersey's pretty big too. Sparks Carnival says, thoughts on Snapchat down 18% after hours on weak advertising revenue. Bad news for Meta tomorrow, I think. Not really. So I have a little bit of an interesting take on Snapchat specifically. I think Snapchat is too niche specific. Who agrees or disagrees with me on that? Real quick, before I go on a big tangent about Snapchat, this is Madison Square Garden. So we are now at the, I would say the main one of the main entrances, which is 8th Avenue and West 33rd Street. It's probably one of the most iconic intersections. Since we have the light, we'll continue to walk here. But here's how I think about sort of those particular tech companies. Why would I segment myself to owning a stock or a company like Snapchat when I could own an Alphabet, when I could own a Microsoft, if you will, when I could own an Amazon, where they have portions of Snapchat's business within a larger entity that generates way more free cash and is more recession-proof, if you will. If you're long something like Alphabet, right, which did crush earnings today. They beat on both the top and the bottom line. Stock's up 5% after hours. They have an advertising business, probably one of the most robust and strongest advertising businesses in the world. Google search, right? YouTube advertisements, which actually beat as well. However, if you do have a recessionary environment where advertising revenue dips, you also have other businesses, right? What did we talk about at the very beginning of the live stream as it pertains to Google? Well, Google's cloud computing unit competes directly with AWS and Microsoft Azure. So a company like Snapchat just seems way too niche specific and almost like gimmicky in a way, right? I'm relying on one source of revenue. I'm relying on, one stream of income. I have Microsoft Azure. I have MS 365. I have Teams, and on and on and on. So I think just the product set is more diverse and more ingrained. And you have all the exposure to the cybersecurity tools, which is a massive growing market. So when I think about an investing framework, right, obviously start from top down, bottom up, but it's most important for me to look at the TAM. And the TAM is an acronym for total addressable market. Like, what is the TAM for Microsoft and their new AI products they're rolling out? What is the TAM for a company like Alphabet or Amazon? It's significantly larger than Snapchat, right? Just sending a couple photos back and forth to your friends. So if I'm going to be, and this isn't advice, this is just we're sort of having a chat. If I'm going to be long something and I have higher quality merchandise to pick from, Microsoft or Alphabet and even Meta is going to win my business, right, in terms of me purchasing the stock over something like Snapchat that is very dependent on one particular business, right, one particular revenue structure. I mean, any thoughts there? I could be off base. I mean, I've never owned the stock. I've never been long. I don't know. Hey, Hemp Lord, what's up? Hey, Julia M, what's up? This is Hey Tom and Fam from Lincoln Center. Well, we're glad you're in New York. It seems like every time you join the chat, it's either you're in Miami or you're in LA. So it's good that we have you back in New York. All right, let me catch up on some of these chats while we look at all the traffic backed up. Hey, Colton says it's a messaging platform for young people, so it is a trend-based profit market. Seems like the risk is not worth for taking in the long term. It just seems like the TAM may be massive, right? And it may be big because you're dealing with younger individuals, maybe Gen Z, millennials. But I like owning infrastructure, if that makes sense. I like owning the infrastructure that powers the entire engine, right? You're not going to have an internet and you're not going to have any businesses literally anywhere without Amazon AWS, without Google Cloud, and without Azure. Like, the internet is just not even going to be a thing. So I would rather own the infrastructure that powers all of these different SaaS tools, websites and applications, than try to bet on one niche specific thing. And that's just my opinion, but. Oh, Pete144 says, I worked at 45 West 34th Street. You know, they're really doing a good job on revamping the neighborhood, particularly with this 2-pen project that is now actually on hold. This is the main Long Island Railroad terminal. I spend most of my time here. Well, I did spend most of my time here. Hey, Western Mass Dave. What's up, Dave? Hope you had a good weekend. Good to see you. Hey, Stoney says shout out from South Slope, Brooklyn, New York. Good to see you.
All right, cool.
Hawaii, good to see you. All right, let's cross here. Now, believe it or not, the location that we are standing right now has some of the highest office vacancy rates in the entire city. There's only one particular location in New York City, or I should say on the island of Manhattan, that has higher office vacancy than where we're standing right now, and that's actually Lower Manhattan. This guy looks to be making it across in one piece. Hey, Nina's here. Says, hey Tom, what's up, Nina? Good to see you. Crypto meme, that's very true. Very true. Hey, Manny says, welcome back. I wish you could have done more videos in Miami. I wish I could have done them too. I've just been put on a big project in New York, so unfortunately, I have to be here. Hey, NBA Elias, what's up? Good to see you. Sparks Carnival says, what else is Meta selling other than ads in the VR headset? Well, here's something interesting, which may be a hot take. A lot of people may not agree with this, but I actually still, even though a lot of people that I know don't use Facebook anymore, I would consider Meta as an infrastructure company. But it's close. And the reason why I say that is because there's so many small businesses in the United States and globally today that rely specifically on Facebook to generate business for their funnel. Now, maybe we have small business owners here, maybe not, but I was reading a really amazing piece. It was actually a piece of equity research. It's an older piece, I think it was like from 2014. Somehow, I think somebody emailed it to me, I think one of my buddies. But it was from Mizuho, and Mizuho is a Japanese investment bank. And one of the main bull theses that this particular equity research associate was writing about is that how you could think about Facebook at the time, right? This was 2014 when the company was still called Facebook. But you could think about Facebook as maybe an infrastructure play due to the amount of small businesses and businesses in general that use Facebook as a sales funnel. And there was some really good infographics there about conversion rates. And speaking of conversion rates, Facebook and Instagram for advertising have some of the highest conversion rates out of any social media platform out there. Does anybody want to know which social media platform has the worst conversion rates? Maybe we will have a guess in the chat. Out of which, I would say, social media application, if you will, what has the worst conversion rates in terms of the bang for your buck for advertising dollars, helping the customers drive them to a landing page and get them to purchase? Hemplord says LinkedIn. No, LinkedIn's actually really, really high conversion rates as well. Justin S says Snapchat. Joseph Hardaway says Twitter. Yeah, you guys got it. It's Twitter. Well, now it's actually not called Twitter, is it? Right? I think over the weekend, Elon Musk changed the name of the company to X. I think maybe next week or later this week, I don't know. They're going to have a new logo, and it's going to be called X now. Any thoughts on that? Now, there was also, I don't know if this was a real interview or it may have been a deep fake. Some of these deep fakes are so real now. Like, I don't even know what's fake news and what's real anymore. But anyway, I guess we'll give it some light. There was an interview where Elon Musk said that X could be 1/3 of the global banking system. And if that's true, I mean, think about that for a total addressable market. I mean, my God. But yeah, anyway, sort of back to the advertising question. Facebook, Meta, and Instagram, which is now owned by Facebook/Meta, has the highest conversion rates for advertising. So if you're a small business owner or even a big business, it's better off to advertise there as opposed to Twitter, because there's virtually, the conversion rates are really, really horrible. For whatever reason on Twitter. I think it's because Twitter is too text-based, and individuals are definitely more visual. Persuasion is a better form of persuasion. Hey, Addison, what's up? Says Elon said that X will be the most valuable brand on earth. Maybe. I definitely don't want to bet against Elon Musk. Look, I mean, maybe. We'll see. Now, I wonder if Elon Musk would ever take X public again, so we could all participate in that wealth creation, hopefully. Sparks Carnival says, if Twitter had tweets, what will posts be on X? That's true. Hey, you can't say you're tweeting anymore. You're Xing? I don't know. Does anybody know when that change is actually going to take place, by the way? I know John Ellis says, did you read my Xeat? I don't know what they'll call it. It's kind of an awkward experience now, right? With the name change. Hey, Pete NYC says he wants X to be like WeChat in Asia. Oh, wow. Where everything is there. It's like an everything app. Yeah. Yeah, I mean, that's a good idea. Now, look, I like Twitter. I think Twitter is really good. I think Twitter has gotten better since Elon Musk has taken over. I think it's all about how you use it, right? Now, can you go down a rabbit hole of political nonsense and fight with people over Twitter about politics? For sure, for sure. And you'd probably be wasting your time. But from a business standpoint, and I could tell you this with 100% certainty, okay? From a business standpoint, if you're in the real estate business, right, particularly the commercial side, so CRE, if you're in multifamily, or if you work on Wall Street, let's say if you work at a big investment bank, maybe you work at a family office, right, a hedge fund. There are niche-specific sort of like communities on Twitter that has a very, very educated populace. From my experience, I've actually closed deals over Twitter. I've met some really incredible people in person through connecting through Twitter. I can't say the same thing about, I don't even use Facebook anymore. I mean, Facebook for me, in 2016, it turned into just a political hellscape of fighting and just nonsense, so I deleted my Facebook. But Twitter, if you utilize it appropriately, right, particularly if you're in the real estate business or the finance business, there's a lot of notable people who work at family offices, right, very notable hedge fund managers that are active on Twitter all day. And you could direct message them and they'll message you back. You'd be surprised. Notable one right off the top of my head, Bill Ackman. Bill Ackman had on Twitter all the time. Dan Tapiero, who I know, who's a great guy. I've connected with him first on Twitter. That's how we met.
He's the CEO and founder of 10T Holdings. And he got his start actually working under Stanley Druckenmiller, who is arguably the greatest trader on the face of the earth. Has the best track record and a verifiable track record, Stanley Druckenmiller. So I think from a calculation of how much time I spend on a platform to the amount of return that it gives me, I think Twitter is number one and YouTube is number two. The question is, how do you monetize effectively and get your advertisers to actually see a very, very aggressive return on investment? And I think that's yet to be solved, in my opinion. Steven says, I actually don't use any social media and it feels so good without it. Well, I think YouTube is a form of social media. But yeah, I think it's all about how you use things, right? If you use it to connect with people, to do deals and network and learn new things, I think it's fantastic. Hey, John Ellis says, Microsoft owns part of the X trademark, as does Meta. I didn't know that. So that's probably going to get a little nasty there. All right, guys, we are standing outside of the Empire State Building. This is actually the line that people take to go all the way up to the top. Now, not for nothing, tonight is probably the best night to go up to the top of the Empire State Building. Very clear night in New York, very high visibility. It's not hot. It's actually kind of cool out tonight. It's not raining. 10 out of 10 night to go to the top of the Empire State Building. Hey, B7 is here. Good to see you. Molly Duran, welcome. Fabi. Hey, Latha is joining us. Always a pleasure. Quinn says Musk has the money to play with the world. I mean, I don't know about that, actually. I think people mistake wealth and liquidity. You know, there's a lot of people on this planet that are a lot more liquid than Elon Musk. SME Media, what's up? Says hello team, good to see you. Masfi says, Tom, what is your opinion on the use of cryptos, especially Dogecoin in X? Well, I've said this many times, and I have sort of an aggressive stance on the cryptocurrency world. And I guess I'll give you my take again because we do have a lot of new people here. I think you gotta play by the rules. And the Securities and Exchange Commission they've been clear and they've also haven't been clear. And their clarity comes from their refusal to be clear, if that makes sense. They haven't, well, over the course of the last 2 weeks, I mean the last 2 months when they've been suing the likes of Binance, Gemini, and Coinbase, the big issue is a lot of these alternative coins, if you will, alternative cryptos, are classified as securities. And that's not something I want to get involved with, particularly if you are trading and you're selling and you're soliciting unlicensed and unregistered securities. Now, the SEC has been very clear to say that Bitcoin is property. So that is why I've been very bullish, and I've owned Bitcoin. All of the other nonsense, I think, is fraudulent, in my view. Particularly and especially the Dogecoin nonsense and all these other altcoins. And since there's no regulatory clarity, it makes it even worse, because a lot of nefarious actors, what they'll do is they'll just create a random coin, if you will, out of nowhere and solicit it to people to essentially create one big money laundering scheme. So from that aspect, I'm so glad that guy turned his radio off. Horrible music. But that's what I would say. I think the value proposition in a cryptocurrency such as Bitcoin, to me, is that it's an unconfiscatable asset, right? Unconfiscatable, truly unconfiscatable. If you have your own private keys, you physically own the asset. I mean, that has been the only value proposition for me. All of this other stuff, these alternative coins, are essentially just software companies that are using these token issues to raise money in an illegal manner, in my view. So I would stay away from it, right? Again, that's my opinion. It doesn't mean I'm right. But I'm sort of one of those Bitcoin people and nothing else until the SEC puts out some sort of regulatory clarity on it. You don't want to get in trouble with the SEC. I think that's probably one of the worst things that you could do. This is an awesome shot, guys. What you're looking at right now is One Vanderbilt. One Vanderbilt is looking fantastic tonight amongst the clouds. Hey, Madison 32 says Grayscale Bitcoin Investment Trust is my investment in that sector. Yeah, so here's another interesting thing. It's interesting you bring up the GBTC, right? So here's one thing I'll say about that, because I was actually involved in that. Well, I'll take that back. I wasn't involved in it. I knew a lot of those guys over there at Grayscale. And here's the problem, okay? Again, going back to my narrative is this. The only value proposition that I see to own Bitcoin is that if you fundamentally understand what Bitcoin is, you'll understand its value proposition. I think anybody who doesn't understand is just a speculator because they're seeing it in the news and they're seeing that it goes up. The value proposition, again, is you can actually physically own your private keys and you could self-custody those keys, making it unconfiscatable. No government could take it from you, no regime, it can't be hacked if you self-custody. The moment you turn it over to somebody else, such as GBTC, Grayscale, you violate the core principle that was the one value proposition of even owning it, right? Which is it's unconfiscatable. Additionally, they have a crazy markup and they have management fees. So with these ETF products, with a lot of the exchange traded funds that track the price of Bitcoin, it has all of the downside risk of owning Bitcoin with minimal upside. So a basic, risk reward thesis here puts the deal underwater, at least for me, right? So you're violating the one sole principle of its value proposition, and you're paying for somebody to violate the value proposition in the form of management fees. Now, I'm not too sure what the expense ratio is owning GBTC, but I think it has to be about 100 basis points, maybe like 1%. And it usually trades at a markup for what Bitcoin is actually going for. So if it were me and you're interested in it, I would just own the physical underlying asset and just self-custody it. I don't see any reason to buy an ETF where somebody else has custody of it and they're charging you fees. Just doesn't make sense. Hey, Carl Roth, what's up? Good to see you. Says greetings, Tom, and good people. Thank you for joining us. Capri says love the commerce future, what they are doing, future of American generations. All right, love that as well. Biz says GBTC lures in, yeah, it's just, look, it's all about AUM, right? Assets under management. That's the name of the game on Wall Street. You know, the more assets you have under management, the more money you make, right? That's why in the hedge fund business, the goal in the hedge fund business is to manage $1 billion, right? Because what's 2% of $1 billion? If a typical hedge fund structure is 2 and 20, right? A basic 2 and 20 structure in the hedge fund business, which is you get 2% in the form of a management fee, which is per annum, right? So an annual management fee on the entire AUM of 2%, right? Simple math, 2% of $1 billion. And then you get 20% of any of the upside, right? So it's the same thing in the ETF business. And that's why I've been a little bit critical of Cathie Wood and her very high beta, you know, sort of growth stock funds, because even though her thesis may be correct in the future, there's no risk management there. So you have no downside protection for your investors, but every single year you're ringing the register on your management fees. I don't know, that doesn't really sit well with me, but I get it. I mean, I like Cathie Wood very much. I actually have met her twice in person. She's a very nice lady. But I think to have no risk management on the downside when you're running such a high beta fund with extremely high management fees, I don't know. I don't know if I could ever do that. I don't know. I want to point out something to you guys. This is one of my favorite locations in New York City. Okay, we are sitting right on the corner of Madison Avenue, and we are overlooking the beautiful Morgan Library. Now, if you haven't been, and you're visiting New York City, or maybe you just moved here or looking to move here, you've got to come to the Morgan Library. It's one of my favorite places in the entire city. And I think my favorite thing about it is the gorgeous architecture on the inside. It almost is very reminiscent of being in the New York Public Library. It's an amazing place, very educational, and some of the exhibits, if you will, or some of the artifacts in the Morgan Library is actually shared with the Henry Clay Frick Museum, or the Frick Collection, which is on the Upper East Side of Manhattan, which is great. Hey, Custom American Fire Trucks. This is Tom. What's your thoughts on debt investing, aka getting a personal loan around 8 to 10% to give to my broker, which currently getting around 17% in return? I think that's a horrible idea. I can't give out investment advice. I'm not a financial advisor. I don't have any license to do this. But in my opinion, you want to negate your risk parameters as much as possible. And for me to go acquire debt at 8% to give to some guy that claims he can get me 17%, I think is nonsense. Okay, and I'm just giving it to you straight. I think a lot of people like to listen to Walks on Wall Street because I don't really sugarcoat things. I'll tell it like it is. That's what I think. If some guy is telling you to go take out a loan at 8% because he can make you 17%, I think he's a fraud. That's what I would say. Because to guarantee 17%, some of the greatest investors to ever do it that have PhDs in math and PhDs in physics, they have a hard time even beating the S&P. So somebody guaranteeing you 17%, it sounds like a charlatan in my view. So I wouldn't do that, but I can't tell you what to do. But I think a lot of people, like guys, you got to understand, if you go take it all the way back, and you look at the annualized returns of the general market, right, the S&P 500, it's roughly around 10%, which is insane. Like, think about that. Just pull up a compound interest calculator. If you go into Google, right, and you just type in compound interest calculator, put in $100,000 right into the calculator, and compound that out at 10% over 40 years. It's a lot of money. You're going to be a decamillionaire, okay? And that is with average market returns. Now, past performance does not guarantee. This is a really nice Tesla. I think this is an older model, maybe 2013. Now, past performance doesn't guarantee future performance, right? The S&P could perform, 5% per annum for the next 40 years, for all I know. But that's still pretty good. And if you look at the majority of mutual funds, the majority of hedge funds on Wall Street, the overwhelming majority struggle and fail to beat the benchmark, right? Which is the S&P or whatever they're benchmarked to. If you run a small cap fund, your benchmark would be the Russell 2000. So whatever portfolio strategy you have, it's difficult to generate profitable returns consistently. The hedge funds who do, and who do it successfully proven over time, tend to be the quantitative strategies, the Renaissance Technologies of the world, the D.E. Shaws of the world, Two Sigma, Citadel Securities, which we've talked about ad nauseum. And you got to understand. So if you're looking at this at face value and you're asking yourself, all of these quantitative funds that run these quant strategies, they tend to beat the market, right? And that's verifiable performance. Now, take it a step further. Who works at these companies, right? I want you guys to do some research at a quantitative researcher position at Citadel, quantitative research position at Two Sigma, 0.72, D.E. Shaw, Renaissance Technologies. The individuals who are the quantitatives at these quant hedge funds, they have PhDs in physics, they have PhDs in math. These are the smartest individuals to walk the planet. Quite literally, it's not hyperbolic. That's the truth. So that's your competition, okay? So for an individual to say, hey, go out and take out an 8% personal loan because I could make you 17%, I would say, okay, show me your PhD from Stanford. Show me your credentials from Harvard. Give me three recommendations, three letters of recommendation from your managing director at Two Sigma or at Goldman Sachs, right? And if they can't provide that to you, then I think they are potentially just a charlatan. So I think it's very important to keep that in mind. It's very difficult to beat the market. It's very, very difficult. 42nd Street. This is one of my favorite views in all of the city. Look at this. Beautiful Chrysler building, amazing Art Deco style. Fantastic. Hey, Aisha Unscripted is here, says, yo, good to see you. My friend Gary Carpenter. Gary, always a pleasure to see you. SME Media. Hey, Dan Sanks, Tom, in your opinion, why do you think the price of gold and silver has not come down? Even though the interest rates are high, is it possible because of stagflation? I don't know. I mean, gold did come down a little bit. Hey, Safat, what is up? The NYC Walking Show. Good to see you, sir. We'll have to meet up this week. I'm going to be back in New York probably for 2 weeks. So hopefully we'll meet up, grab a coffee or something. It's always good to see you. I'm sure all of you guys know, but if you have not, please go check out our good friend at the NYC Walking Show. Great channel, very good cinematographer for some standalone New York City walking videos. Very good framing, really like his content, and he's a good friend of mine, great guy. So if you haven't already, please check him out. I think you're gonna like the content you see there at the NYC Walking Show. We got about 3 seconds, I think we'll make it. 1 second. I think we'll make it. We just made it. Since we're here, let's just take one lap around One Vanderbilt, or Grand Central Station, I should say. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually start these live streams around 8:30. So if you like what you see and you want to join us next time, feel free to subscribe to the channel. What's the score, or what was the score of the Yankee-Mets game, by the way? I didn't even know they were playing tonight, but from a lot of the viewers in the chat, it seems as if they played tonight.
It's right here. I'm gonna go. All right.
Hey, Andy is here. What's up? This is Good Evening, Tom. Andy, hope to be in South Korea sometime next year. Hopefully. I've got my passport situated. Maybe we'll meet up in South Korea. Hey, the short guy says Mets 9, Yankees 3. That's not good. Now, I'm not a big baseball guy, but if I had to root for somebody, it'd definitely be the Yankees. Now, it's funny, speaking of the hedge fund business, the owner of the Mets is the owner of Point72, which is a very successful hedge fund on the street. Hey, Daniel G, what's up from Buenos Aires? Always a pleasure to see you. SME Media says, anybody following the Women's World Cup? When does that start? I think that starts soon, right? I'll definitely follow it for sure. I love the World Cup. I just don't know when it starts. I know it is this year. I don't know if it already started, but yeah, I'll watch it. 100%. Hey, Troy Atman says, Tommy, you going to any soccer games in Miami to watch Messi play? Dude, that would be such a dream and a goal of mine to do that. The problem is the tickets are ridiculous, right? For the Messi effect. Now, before Messi came to Inter Miami, you could go to a game for like $20. Not so much anymore. I think the cheapest ticket's like $500. And maybe even more than that. But for any soccer fans out there, I think it's going to get even more expensive to go to an Inter Miami game because they just signed.
I usually try.
Who did they just sign? I just lost the guy's name. He was another World Cup champion. He used to play for Barcelona. That was his club team. His national team was Spain. I think he scored the winning goal when Spain won the World Cup. And he's going to be joining Messi at Inter Miami. I think Iniesta, I think. But yeah, I mean, I would love to go. I don't know if I could spend $500 on a ticket. Ah, you're right. They signed somebody. But look, I was down in Miami this weekend, and usually there's not a lot of people. Usually it is dead, right, relatively speaking, for obvious reasons, right? It is extremely hot and extremely humid in Miami in July and August, but it was actually pretty packed, right? We walked around Brickell, tons of people, a lot of people out. So I can only imagine what the winter is going to be like. Hey, Jafet Perez, is the Apple store still open? Yeah, there's one right here in Grand Central Station. Now, speaking of Apple, they're reporting earnings next week. and Meta is tomorrow. But for those of you who are just joining, the main bulk of the conversation tonight was focused around what's going to happen tomorrow. And if you don't know, tomorrow is the conclusion of the FOMC meeting, the Federal Open Market Committee meeting. If you look at futures, there's about 100% probability, literally 100% probability, that the Federal Reserve is going to raise their Fed funds rate by 25 basis points. And that would bring the Fed funds rate to a range of about 5.25% to 5.5%, which should do it, assuming that the projections by many of the Wall Street mega banks are correct. There's many economists and many analysts that believe the Fed is going to be done at 5.5%. We'll see. I don't know. Any predictions for tomorrow? I know we don't like making predictions usually, but I think it'd be fun. What do you guys think? You think the Fed's going to go 25 basis points tomorrow? And what do you think the reaction is going to be? Do you think stocks are going to take a dive? Do you think stocks are going to rally? Now, I'll give a prediction. I'm going to go with consensus here. And I think that the Fed is going to raise rates by 25 basis points, right? Consensus is pretty much a lock. I think the only thing that's going to matter tomorrow, in my view, is the speech from Fed Chair Jerome Powell. If he comes out like a hawk, or if he comes out like a dove, I think that's going to influence markets one way or another. This guy's playing the bagpipes. Hey, NBA Elias is 25. Everybody's pretty much at 25. Marx's final increase. Wow, Tariq Khan's is no increase. You think they're going to do a double pause? Interesting. Susanna Q Force is 25 basis points. The economy is good. John Ellis is 50% chance that the Fed will raise again at the next meeting. Yeah, I mean, it's a good point. I think in my view, I think there's going to be a lot of talk about wage inflation. That'll be my, little fun prediction. I mean, you could watch the speech live, Fed Chair Jerome Powell. It's probably going to be broadcast live on CNBC as well as YouTube. But I think there's going to be a lot of talk about wage inflation. I think there could be like a celebratory, little statement there, just so Fed Chair Jerome Powell can sort of pat himself on the back. Which, look, I mean, in all honesty, everybody likes to dump on the Federal Reserve, myself included. Okay, I'm not the biggest fan of the Federal Reserve. Early on, I've actually been more of an end the Fed type of person. But if you want to do a little bit of review, when we started this quantitative tightening cycle, this was March of 2022, and we had peak inflation. I'll show you the front of the Yale Club. We had peak inflation of about 9.1%. So June of 2022, the CPI headline reading in the United States was 9.1%. It's ridiculous. Almost double-digit inflation in America. Wild. Now fast forward a year later and 10 rate hikes later, CPI came in June 2023 right at 3%. So for those people who are still on the narrative that inflation is not going to come down in the US, I mean, it's in a free fall. It's already coming down. Now, the problem is, and we've sort of talked about this so many times now, the biggest problem is the individual categories. So again, if you're just joining the stream, if you type !CPI, okay, !CPI in the chat, I want you to click the link. It's going to take you to the Bureau of Labor Statistics website. And you're going to see an infographic of a 12-month rolling average of every single CPI reading that came out. And I want you to play around with it because you can select and deselect specific subcategories. For example, you could see individually shelter costs. You could see individually what's going on with new vehicles, with used vehicles. This is sort of the little food hall here. I go here sometimes. It's too expensive in here. If you walk in here, you're gonna leave paying $30. Doesn't matter what you buy. It's like a flat $30 fee in here. But I think it's a very good visual to see just exactly has been improving as it relates to inflation and what hasn't improved at all. Now, commodities and energy have been in free fall in the United States, but I want everybody to take a look at crude oil futures, right? So if you type ticker symbol CL, right, if you're at your Bloomberg terminal, MarketSmith, TradingView, crude has actually been on a pretty big rally over the past couple, I would say the past couple trading weeks. We'll make a right here and go to and JP Morgan Chase's brand new headquarters, 270 Park Avenue. But I think crude is now what, $77 a barrel, maybe even a little bit more. Hey, Troy Atman, what's up? Wow, it's crowded here. We're on the corner of 46th Street and what is this, Madison? Yeah, Madison Avenue. We're gonna make a right. Somebody says crude, no resistance till $83. Yeah, I mean, maybe we'll see a little bit of a bid. I would be shocked to see crude oil going back above $100 a barrel, though. We'll see. I guess anything's possible. I don't think so, to be honest. Yeah, cloud numbers. There's a lot of people there. Somebody says, with Messi's arrival to the MLS, is there any way to profit from it? Well, look, I think in a direct way, I mean, unless you're a shareholder in one of these MLS teams, like David Beckham is, he's going to make a fortune. I think it's good for the overall economy in the state of Florida, right? This is a nice Tesla here. Because you got to understand something. The state of Florida still, okay, is very dependent on hospitality and tourism, right? Florida is a tourism state. That is the bulk of the business. So that being said, you know, Leo Messi coming to Miami. This is Jamie Dimon's brand new office tower. This is 270 Park Avenue. It's going to be a gorgeous Class A property right here. But with Leo Messi coming to Miami, it can't hurt, right? Now, the game was completely sold out. And I think that was Messi's first game in Miami. It's actually technically in Fort Lauderdale, the stadium, but you get the point. Also, Messi is from Argentina, and there is a huge Argentine community in Miami. So I think that's going to attract tons and tons of people. I mean, if you're from Argentina and you've been thinking about making the move to Miami, I think this pretty much seals the deal, right? You know, for anybody who wants to visit Miami, Florida specifically, go to 72nd Street and Collins Avenue. So 72nd and Collins. It's called Little Buenos Aires. And it's an amazing place. It's my favorite part of Miami. You have all these Argentine restaurants and bakeries, coffee shops. It's an unbelievable place. So I would check that out. All right, we're at Park Avenue. We're gonna have a really good view of the construction that's going on here at 270 Park. Look at that. Hey, Evan Weeks, what's up? Evan, we briefly went over the numbers for Alphabet's earnings report. They did beat on both the top and the bottom line. EPS came in at $1.44. Many analysts on the street were expecting $1.34, so beat expectations on the bottom line. Also for revenue they beat, coming in at $74.6 billion. Analysts on the street had a consensus of about $72.8 billion, but I want to know your take on Google's cloud unit. That beat in a really, really big way. Now, here's a crazy statistic for everybody on Google Cloud. This time last year, so this quarter last year, the cloud computing unit of Alphabet, Google, lost about 500, this is a better shot, 270 Park. Lost about $590 million last year. Right, compare that to this year, they had an operating income of $395 million. So huge turnaround. There's going to be huge profitability in Google's cloud computing unit, pretty much going on in perpetuity. I think that's probably one of the main reasons why the stock's up 5%. Hey, Tariq Khan says GCP is nothing near AWS. It's gaining some steam. It is gaining steam. Now, Tariq, for some reason, we've been having a lot of people, right? Every earnings season we have this conversation. You know, the battle of the big three, the battle of AWS, Azure, and Google Cloud. A lot of people have been having issues and not saying very positive things about AWS. But I guess we'll get more information on that next week when Amazon reports their earnings. Wow, they're totally transforming Park Avenue. This is looking really good. Looks like they're expanding the sidewalks, so there's going to be way more room for pedestrians. Very cool. Here's another look from this angle. Hey, Bruno's here. What's up? And this is the classic Cause statue. That's at 280 Park. We used to have this in our office, but in black. Yeah, the Elmo. CED TV, is that true? I didn't know that. Hey, Cayenne Pacific is here. Sparks Carnival says, don't forget, Alphabet is a cybersecurity company. Same with Microsoft pretty much too, right? Yeah, Tariq Khan says, Tom, I don't have too many good things to say about AWS, and I'm an architect as well. I'm interested in this UPS chat we got going on. Let me read some chats. NBA Elias says, the USPS thought it could make up the difference from a UPS strike, but not with those go-kart trucks they have. Yeah, I mean, it seems like, and I haven't really been paying attention to a lot of these strikes going on across the United States, but I feel like the labor movement, and before I say this isn't an opinion on the movement, this is an observation on the movement, okay? So I don't care if you guys are for labor unions or against. I respect both opinions. That's not the point. The point I'm trying to make is it seems as if the labor union movement has been gaining popularity. Now, if you go, let's go back 2 years, right? Almost 3 years now. Wow, the start of the virus. We started to see a lot of the Amazon workers start to formulate unions, or at least show interest in doing so, right? Amazon warehouse workers. I think most notably local to New York, the Staten Island workers. Anybody remember that? Next, you had a lot of the Starbucks employees wanting to unionize. I think in Buffalo, New York, which is upstate. Then you have a lot of the Hollywood actors, right, and screenwriters. They're on strike, right? So their union is actively trying to negotiate a better contract, and they're on strike. It just seems like the labor union movement, whether you agree with it or not, it seems to be more in the news. Has anybody noticed that, or is it maybe it's just because it's in the news? Sparks Carnival says Starbucks has struggled with labor this year. Brad's Brain says, if you weren't worried about the UPS strike, you have a very short memory. What was another big strike that happened? Remember we were talking about the railroad strike? That was another big one, the rail workers. I think that came down to the wire where President Joe Biden had to get involved and broker a deal there. Yeah, the dock workers was another thing. Yeah, it just seems like there's a lot of tensions. Nako says teachers in LA also. I didn't even know about that one. Abby 1. This is a news station reported that songwriters are considering striking. Hey, DM, good to see you. Thank you for your very kind email. DC says, look at the residuals that the actors and writers are getting. Yeah, I don't know. I think it just seems, I mean, maybe this has to tie into wage inflation too, right? You see pretty much everybody getting a raise to keep up with the cost of living. But do you guys know one thing that a lot of people aren't talking about, which is very important, that I think has had a major impact on consumer spending? It's been Social Security, right? I think Social Security just got its largest raise ever in terms of the amount of money in the Social Security checks. Could anybody provide any insight on that? Maybe some of you are receiving Social Security. Maybe you got the bump. But I would assume that definitely has an impact on consumer spending. This is my favorite building in all of the city. It's Seagram building. Hey, Connie Ruiz. Hey, Connie. Thank you for joining us. 1965 says Tom, tight labor market equals more bargaining power. That's true. That's a good point. Brad's Brain says I'm referring to the shipping disaster throughout the virus. That was due to production, but the delays would have been similar. That's another thing. Brad's Brain's point. Supply chain disruptions. I mean, I even remember watching that 60 Minutes like mini documentary series. Anybody remember that? On the, I think it was some major port in California, and even in Miami too, where the cargo ships were just lined up for miles out into the sea. That was a disaster. Yeah, the LA port, Mark says, you're right. Somebody says, haven't heard of any Social Security bump yet. Desi says, but Social Security recipients paid into Social Security. Yes, there was the largest increase in years, but it's not enough to live on. Yeah, I mean, I don't know. I think it was the biggest adjustment because inflation was so high, right? So obviously the administration, this isn't a knock, I'm not trying to get political, but if you have at the time, right, inflation in the United States in June of 2022 was at 9.1%. Now it's at 3%. So the cost of living adjustment had to, reflect that. Let me give you guys a good shot of the Seagram building. This is my favorite building in the entire city. Madison 32 says the extra Social Security is going to purchase food and pay the higher bills for energy. Now, sort of a little bit of anecdote here on inflation. Do you guys want to know something absolutely freaking sickening? I'll tell you something. Listen to how crazy this is. Now, I don't know. I don't usually go grocery shopping as much as many of you, because living in Manhattan and, working, 12-hour days, you eat out a lot, right? You just get something to eat at the restaurant real quick or take out. But I got to tell you a story, okay? So I flew in from Miami, landed at JFK, took the air train to Jamaica. From Jamaica, I went to Penn Station, and then I went home. I got home at around 1 o'clock in the morning. Real quick, this is East 54th Street and Park Avenue. And what you're looking at right here is 425 Park. This is one of the newest and most exclusive Class A office buildings in Manhattan. And we've been seeing a huge flight to quality. Citadel Securities is in there, but Ken Griffin is actually going to be building his own mega super tall tower right here on Park Avenue as well as in Miami. But anyway, I digress. So I was hungry, right? I was tired. I'm like, you know what? I'm just going to go into the CVS and I'm going to get a box of cereal. I had some milk in the refrigerator. I'm like, you know what? I'm just going to buy a box of cereal. Does anybody want to guess how much it cost me for one? It was a family-sized box, to be fair, but one family-sized box of Honey Nut Cheerios. Does anybody want to take a guess? This will be the inflation poll in the chat. Just guess. Have a guess. Okay, $8. Good guess. $5, Mark. Okay. Daryl says 8. Tim says 15. Okay, interesting. The LT Prod says $12.99. $6, $7. Lathis is $9. These are actually really good guesses, by the way. Dale says 7. D Wood says 17. Oh my God. With tax, okay? With tax, the bill for one box of cereal at the CVS on 8th Avenue near the Moynihan train station was $13.60. $13.60. And that's not BS. That is not BS. I couldn't believe it. Now, okay, let me be a little bit fair here. I understand that if you buy cereal in a drugstore in Manhattan, it's going to be way more expensive than going to the regular grocery store. I get it. I understand. But almost $15 for cereal, one box of cereal, it's absolutely insane. And the reason why I got the family size box is because the regular boxes were $9. So I'm like, it's going to be like pretty much the same thing. So it's gotten to the point where if you walk into a particular drugstore, CVS, on the island of Manhattan, and you just want to buy a few things. You want to buy milk. Maybe, you coming home from work late, you don't have any breakfast food for the kids. I'm just going to go to the CVS, get some milk, I'll get some eggs, and I'll get a box of cereal. It is very possible that you could walk out of that CVS spending over $25 on a box of cereal, milk, and eggs. I mean, is that not nuts? Not being political at all, okay? But that is nuts. To me, I mean, that was just bonkers to me. Has anybody had the same, and tell me if you think this is BS. Like, I want to hear from you guys. Wherever you are in the country, right? We have people watching from all over. Are you sort of seeing the same sticker shock, right, for a box of cereal in your grocery store or, in your local CVS? I mean, what are you guys seeing? I know Keith is like, quit looking at Ferraris if you can't afford cereal. That's so true. That's hilarious. Yeah, Western Mass Dave's is $13.60. Yeah. AVHD says that's almost everywhere, though, in Manhattan. Oh, almost everywhere, not just Manhattan. Copy that. Someone says oatmeal would have been cheaper. Susanna Q4 says family-sized Cheerio cereal is $9. Plus taxes, it goes to $13. Some people are saying I'm getting sticker shock at Costco. Yeah, Brick Stonewall says don't buy food at drugstores. I totally get that and I appreciate that. But it was 1 o'clock in the morning. I didn't really have any other options. But I totally get your comment there. NBA Elias says, Tom, I just paid $18.50 for a sandwich at the airport. Whew. That's steep. Now, some of the food items in Manhattan have gotten so bonkers where I've actually created a series on my Twitter called Name That Price. So once a week, if I'm out and about and I have extreme sticker shock in New York, I'll post a picture of what I bought and I'll say, name that price. And it's so crazy because so many people undershoot the price. They can't believe how expensive everything is. If you want to check us out on Twitter, you could follow @WalksWallStreet on Twitter. But speaking of things that are insanely expensive, almost as expensive as the $13.60 box of cereal, this is 432 Park Avenue. This is one of the tallest, most exclusive, and most luxurious apartment buildings in Manhattan. This was essentially Harry Maclau's prized project. Now, there's also another project a little bit further down in Lower Manhattan called 1 Wall Street, which is also a Maclau, let me just cross the street here, property. Really, really gorgeous though. Amazing, very, very unique building, 432 Park. Now, it's really cool because my new office is right here. It's literally this window right here. And you could see into some of the apartments actually. So this will be my new home, if you will. The LT prods is consumers get fleeced in parts of the country that have higher incomes. Yeah, you're right. You're 100% right. Let me catch up on some of the comments because I want to see if anybody posted anything about food expenses. Hey, DM. Says Tom, the CVS prices are higher in tourist areas, less in residential neighborhoods. I've noticed that too. It's unfortunate that I live near the Hudson Yards now. No, but you're totally right. So again, give or take $2. But even that, guys, okay, let's say, $13.60, right? For the family size box of cereal. You even knock off $5, that's still ridiculous. I mean, $8 for cereal, right? That to me is still a little bit ridiculous. I feel like it never used to be like that. Cereal is just so expensive. But yeah, if anybody is in the city and you work in Manhattan, you work in Midtown, and you want to grab coffee, shoot me a text on Twitter. Shoot me a text or a direct message on my IG. This is my new office, 575 Madison Avenue, and I'm always around. I mean, I've actually gotten coffee and met up with a ton of you guys already. Even down in Miami, we were hanging out with some viewers, and I think that's what the stream is all about, right? Making connections, business relationships, hanging out, having a chat. So if anybody wants to grab lunch, let me know. All right, we'll cross here by the bus. Wow, Leithus has paid $8 for a quart of yogurt. I feel like that's not too bad. I feel like that's actually a really good price.